As more countries have entered the competitive fray over the last few decades and want to take their share of the global economy, tax rates, in particular in emerging and smaller countries, have come down. And today I'm going to share with you a number of countries that we really never talk about that have really low tax rates and whether you should consider them or not. If you're looking at incorporating your business offshore, you should definitely follow my tax-friendly quadrant. You can find that episode separately. But you also want to figure out where you actually want to incorporate. And this is a big discussion that really depends on so many different factors in your business. But no doubt you've heard of the British Virgin Islands and the Cayman Islands and the UAE and the different free zones in Dubai and elsewhere. You've heard about companies like Hong Kong. And you've even heard about some of the farther flung places that really don't work anymore, like the Vanuatu's and the Marshall Islands, that really I would, generally speaking, avoid. But today I want to talk about low tax countries that have not zero tax, that actually do have some requirements, that are actually in real countries that have real economic activity, and whether you should use those companies for your business or not. Now, if it's your first time here, my name is Andrew Henderson, the founder of Nomad Capitalist. We're a boutique consultancy that helps 7- and 8-figure entrepreneurs and investors legally go where you're treated best. That means reducing your taxes, diversifying and protecting your assets, building your freedom with second passports, and all kinds of international stuff. You can learn more at nomadcapitalist.com, and you can also learn more about our conference called Nomad Capitalist Live, which is open to everybody. So let's just start with the first one, which is Barbados. Barbados used to have kind of this Hong Kong-esque and now somewhat UAE-esque two-tier offshore tax system, which the high-tax lobbying groups around the world are trying to get rid of. Basically where, hey, if you do business locally, if you run a hot dog cart, you sell dresses at the mall, you pay one rate of tax. And if you are an international consultancy with people all over the world, then you can pay a different rate, or you can pay zero when you're exempt from tax because you don't actually do business in the country. So they're trying to get rid of regimes like that. And so a country like Barbados, which is smaller, is going to eventually have to agree, whereas maybe like a Hong Kong is not going to have to agree, or a UAE is not going to have to agree, at least as quickly. What Barbados did is they said, okay, we're basically going to lower taxes on everybody, and we're going to put a top tax rate of 5.5%. So that's a pretty low tax rate to begin with. And then they basically said the more money you make, taxes aren't going to be progressive, they're going to be regressive. And so we're going to go down as low as 1%. Once you start making millions, we're going to tax you at 1%. And so the more you make, the less you pay, because they're following the principle that we talk about, where it's interesting that a person who pays $1,000 in tax wants to tell you who paid $1 million in tax that it's not a fair share because your rate was too low for their liking. Barbados is saying, hey, if you're paying us a bunch of money, we're going to make it easier on you as you go. And so the rate goes as low as 1%. What's interesting is not only is it not a bad place to live, and you can get a residence permit in Barbados, and they've got a decent personal income tax regime system as well, you've also got certain tax treaties with the US and Canada that for some entrepreneurs could be helpful. So that's an interesting one in Barbados. And you can do a number of different things there. In Europe, you've got a number of countries that have reduced tax rates. And so I'm just going to go through headline tax rates. Some countries in Europe have special rates for if you're doing 100,000 or 500,000 or $1 million. I'm going to focus on just the general tax rate, assuming you're not running a telecom company or an oil and gas company, just a normal entrepreneur with a good level of profit. You're not using some micro business exemption. Hungary has a corporate rate of 9%, and so they're the ones who've been really pushing back on this global minimum tax in the EU, saying, we want to be competitive, stop making us not competitive. And you've seen countries around Europe, like Andorra, which I'll come to in a moment, they used to really not have much in the way of taxes, and then other countries in Europe came in and bullied them. And Hungary has really been pushing back on, no, we don't want this global system. The economy is going to get worse potentially. Like, we want to be competitive. And so good thing that countries like that exist. I don't love everything about Hungary, but you have to admit they have a good corporate tax regime. And so for people who need to be based in Europe or who benefit from being within the European Union, hiring and for whatever else, this could be not a bad place to be. 9% tax. Also 9% tax, Montenegro. Uses the euro, not the European Union. At least now. So Montenegro has the same 9% tax rate, and so you can set up a company in Montenegro. You can get a residence permit. If you do that, you have to pay yourself a little bit of a salary, a little bit of salary tax as the director, but you can pay basically 9% corporate tax on all of your profits. If you want to live there, you can get basically the same rate in most cases on your personal income. So those two are at 9%. If you're looking for something a bit further west, nestled in between Spain and France is the lovely country of Andorra. Have been there in summer and have been there in winter. And they have a 10% tax. Again, it's a little bit lower if you're running a really small business, but generally speaking, 10%. And so you can use that business, or you can use a real estate purchase to get a residence permit in Andorra. You spend 3 months or more there, and you can keep that residence permit, and you've got a place in Western Europe. good standard of living. Can't say it's the most exciting place in the world, but if you like summer sports, if you like skiing, if you like snowboarding, not a bad place to be, and you can run your business there, 10%. Back in Eastern Europe, Bosnia, which has had, much like Serbia, a really improved passport in recent years. I'm not saying it's necessarily an easy passport to get unless you're ethnically Bosnian, but the passport's grown, and the tax rates have come down. They are at a flat 10%. So the Balkans really, in terms of Europe, is one of the best regions. Obviously, Hungary next door. Romania has an interesting incentive for smaller businesses. Bulgaria we'll get to in a moment. And then you have, Serbia's okay. Macedonia. You have Montenegro, and Bosnia actually has joined that fray. So 10% tax in Bosnia. I also mentioned Bulgaria. So again, if you want to be in the European Union, this can also come in handy if you're going to be living somewhere in the European Union where you're subject to a tax blacklist, where there are certain countries in Europe where if you were to live there, you can't have your company in the UAE, for example, or the Cayman Islands. They just don't allow it. You'll pay a penalty rate. It's not a good idea. You need to incorporate somewhere in Europe. Obviously, Malta has a decent scheme. If you just want to keep things easier, a little bit cheaper to administer, a little bit simpler corporate structure, Bulgaria can work for some businesses. And they have a flat, basically 10% tax. You can also get residence permits in Bulgaria. If you hire people in the company, you can go up to permanent residence. You can work your way to citizenship. And so there's a number of opportunities there. The Bulgarian passport, not a bad passport to have. It does not offer, as of now, visa-free access to the United States, but it's a European Union passport. You can pretty much travel anywhere else that you want. And so also in the region, North Macedonia, 10% tax. They have raised some other taxes. What's interesting about Macedonia is they have adopted a form of the Estonian tax model, whereby distributions are taxed. And so you can basically pay 10% when you actually take money, but you get to reinvest money in the meantime. So it's a form of that model that Estonia pioneered that put Estonia on the map, basically, along with their kind of difficult-to-use e-residence program. But they've got a 10% tax rate. Also, two, you could call them territories, perhaps. Kosovo at 10%, also in the Balkans, and then Gibraltar, obviously at the tip of Spain, which recently raised their tax rate to 12.5%. Now, these are some countries, as you can see, primarily in Europe, where they've lowered tax rates to compete. Okay, smaller countries for the most part. Some of them are the EU, and they are the ones fighting the EU to not have to raise their taxes. You've got one Caribbean island. What's the upside of these? Okay, if you want to get a residence permit in some of these countries, that may be one of the best ways to do it. I think in some of these countries you can buy real estate. In Gibraltar, certainly you can go and you can live there if you pay a lump sum amount of tax. There's a couple different tax programs. So that some of these countries have other ways to get residence permits, but especially if you just want to keep your cost of getting a residence permit down, you start a company, you can get a residence permit in most of these places. You may need to show varying levels of economic activity. The days of just setting up a company and just kind of letting it sit and keeping a residence permit going long term, or even getting one to begin with, are becoming more and more difficult. But if you want a residence permit, if you need a company, as I said, you want to live somewhere in Europe, or for whatever optics reasons, or for whatever business reasons, you want a place that's not on some of the low tax lists. These places may not be on low tax lists, right? So if you're living in Europe, you have a European Union company, that can work, right? Or if you're doing business in the Marshall Islands right now, that could just look weird. Montenegro has a low tax. People probably don't look or think twice too much about it. And so that gives you that benefit. You might also have access to various tax treaties, and some businesses may benefit from a tax treaty depending on what kind of products you're selling or where you're living. Any number of reasons to have a tax treaty. Now, the reason why we don't talk about these jurisdictions as much is because they're often harder to operate. So, okay, Bulgaria is going to be easier to operate. Hungary is going to be relatively easy to operate. I mean, the countries where they have kind of an industry around, well known for low tax, you've certainly had some infrastructure build out. So Bulgaria, to some extent Barbados, although the banks I think aren't going to be as robust. Some of these countries are going to have infrastructure. I can tell you, spending a number of my summers and having a home in Montenegro, the banks are not really that sophisticated. Online banking is very unsophisticated. The idea of sending money to people all over the world is really unheard of, quite frankly. And so it's not really a robust international financial center. You're also, if you're in the e-commerce business, for example, if you need PayPal, if you need to take credit cards, I guess they have PayPal in pretty much every country, but you're going to pay higher rates. It's going to be harder. You're going to have more checks. You're going to have just all kinds of just extra bureaucracy and frustrations having a company in North Macedonia. Again, an EU company may be easier to administer, but you're also going to have generally more paperwork to do with that on the back end and on an ongoing basis. So the reason why these companies often don't stand out is, okay, you can go to Gibraltar and you can set up a company like a Nomad Capitalist. You have a lesser number of wire transfers coming in and out from all around the world. They probably understand that. But if you're running some kind of online business or some kind of high volume business, that may be more difficult either structurally to set up as well as for them to really understand. And so what you're going to often get into is, if you were to set up in jurisdictions like this, is you would want to have some kind of multi-part structure. I think even when you set up in like the UAE or other places, you still want a multi-part structure where you figure out where's the best kind of headquarters. In a place like a UAE, for example, is not a bad option, or Cayman Islands is not a bad option, because you can get residence permits for yourself and even for other people that you want to bring in and run the company. And there you are in the headquarters. You don't have to be, but you could be. You could potentially do that in some cases here, although a lot of these jurisdictions are going to encourage you to hire local workers, which, some of these countries are pretty small, and so if you want to hire local, that's not going to work. These countries' headquarters aren't really as attractive because they don't let you bring people in. The tax rate isn't as low. You've got some of the banking challenges where I suppose you could take a Hungarian company and go and get an offshore bank account. You absolutely could do that. But the reason why I would suggest having a higher level jurisdiction for my company is the out-of-the-box benefits, such as I can receive more varieties of payments. It's easier to run. It's more, simplified tax procedures. The banks will accept me. So if you have a UAE company and you get a UAE residence permit as a result, you can generally open a UAE bank account. And that's not a terrible bank. The fees aren't really that bad, and it's a lot better than opening, some company in like a weird, far-flung location and then trying to get some bank account like in Dominica. We'll do that for folks if it's needed, and we'll tell them like, okay, here's how to move the money out of Dominica, rather quickly, and you dividend it out or whatever. But if you're going to have a multi-part structure, if you're going to collect credit cards, if you're going to employ people, these companies just aren't going to be as flexible unless you're going to be doing business in the region. You also may have to pay yourself a salary from these companies, and then it's kind of more administrative work. So now you've got monthly accounting potentially. You've got payroll for yourself. It's just an extra cost, and so it's going to be harder to run a lot of these companies remotely. Again, Hungary, Bulgaria, maybe Barbados are better. These are not bad companies, but I think that unless you're running a really old school business, they're not going to be as flexible as what you'd find in a lot of the truly international offshore centers. Onshore is the new offshore, no doubt. These tiny little islands, again, Barbados has a little bit higher level of sophistication, but like tiny little islands, I've incorporated in Dominica, Marshall Islands, Vanuatu, I think that's out. But more robust jurisdictions that keep things easy, have access to great banks, are respected around the world, are known around the world more than Kosovo or Montenegro. I think those are all valuable things. That's why we don't talk as much about these companies. Even though they offer low tax rates, you can probably do better for most kinds of businesses. Lower taxes, easier operations, it's a lot better.